had an extremely stressful, hectic 45 days trying to track down our 1031 exchange property so that we could successfully invest $1 million from the sale of our last deal and not have to pay any tax. If we couldn't do it in time, we were gonna have to pay $300,000 in taxes. Executing a 1031 exchange can be fairly stressful, and so what I've learned after doing 3 or 4 1031 exchanges now is you need to really get ahead of the ball. So let me back up a little bit. We had previously, prior to buying this building, we had previously bought a storage unit facility. It was vacant, no one was marketing it, the guy wasn't putting any work, it was about 70% occupied. We took that over, we turned it around in just 2.5 years. We made $1 million in 30 months selling that deal. So the cool thing about real estate is when you sell a deal, you have what's called a 1031 exchange option. You're able to roll those proceeds from the sale of the last deal into the next deal and pay 0 tax. However, there is a catch to using a 1031 exchange. You need to find the deal within 45 days, which they call this the identification period. So within 45 days, you need to identify with an address, an exact property that you're gonna roll the funds into. The next catch is that within 180 days, so not another 180 days after the 45, but 180 days from the sale of that first property, you must close the deal to roll the proceeds into to make sure you're in compliance with the 1031 exchange, and therefore, if you are, you don't have to pay any tax. The deal that you roll funds into must be of equal value or of greater value than the deal that you previously sold. Prior to this one, I'd done 1031 exchanges before. I always came up really tight to those deadlines to the point where it was scary. And so with this deal, when we were doing it, I've stayed very proactive. I would recommend anyone looking to do a 1031, be very proactive, get ahead of it. If you know your property's under contract, and if you know you're gonna end up rolling those proceeds into a 1031 property, make sure you start going out and looking for a property prior to that property even selling. So since I was confident in the buyer who was gonna buy our storage units, that he was gonna close successfully, I immediately, about 45, 90 days prior to us having the transaction close, I actually got out and started looking at all different types of deals. And I'm very glad that I did that. By not procrastinating, I essentially made more time. Instead of having 45 days to identify, I was essentially giving myself 90 to 100 days to identify a piece of property. So what did I do? I hit the streets, I walked the pavement, I knocked on doors, I called my property list, and I could find nothing. Then one day I was stumbling through a broker website, which this is what I recommend you do. I go through all the broker websites all the time. There's tons of brokers out there, your local brokerages. Go through those lists, because sometimes, even though you're signed up on an email list, it might go to your junk mail, you might miss it. I'm thankful I went to the Cushman Wakefield website because I found this deal behind me. And it was perfect. It's 96 units, and the value was greater than that of the storage units that we were selling, qualifying this for our 1031 exchange. We immediately went out to see the property. I met the brokers out here. We started running numbers on the back of a napkin, doing mental math on it. Then we started to do actual legitimate pro formas where we take our actual Excel document, run this deal and the rents and the expenses and what we think the rents can get to all the way through our full Excel pro forma package. And we found out, hey, this is a really strong cash flow day one. And when checking the comparable rents in the area, we knew that these current rents, that even though this building was in a cash flow day one, these current rents were well under the market. And we were gonna be able to raise those rents over time by doing minor upgrades to the apartments, which would then give us more cash flow right up front, but also added value to the property. After negotiating with the seller for a few weeks, we finally came to the purchase price that was equal to $50,000 per unit. Since this is 96 units, the total price worked out to just about $4.75 million. Given that we were now under contract, I felt very confident that we were going to close the deal. So I identified this property officially as our 1031 exchange property where we'd roll the proceeds into. And we were able to identify this property within 14 days of selling the previous asset, well in advance of the 45-day threshold. We then were able to close about 75 days later, which was again way ahead of the 180-day deadline that we had to close on the deal to qualify and make it a valid 1031 exchange, so that our $1 million was going to go tax-free into this deal. By doing that, we kept that much more money working for us versus paying Uncle Sam. In this deal, we also raised funds from other investors to go along with our 1031 money. So in just 3.5 years, we've taken the value of this property from being a $4.75 million purchase up to nearly an $8 million valuation on this 96 unit deal. Thank you 1031 Exchange for allowing us to roll $1 million forward without having to pay any income tax at all. This is now the third property that I've actually done a successful 1031 exchange on, which has allowed me to keep a lot more money working for myself, my family, and our investors. If you're interested in seeing more about our storage unit deal, how we successfully made $1 million in 30 months, check this video out right here. If you haven't yet, please subscribe to the channel. Let us know what you want to see. Like, leave a comment, and we'll see you soon.